Dear participants, it is a pleasure to welcome you to Civinity Investor Webinar on the company's financial results for the year 2025. I am Olga from Nasdaq Vilnius, and I will be moderating today's event. We will begin with the company's presentation, after which we will address your questions. You are kindly invited to submit your questions in writing by using the Q&A window below the presentation, or you can raise your hand and be unmuted after the presentation is over. Please be informed that this session is being recorded and the replay will be available on the Nasdaq Baltic YouTube channel shortly after the call. That being said, I am pleased to introduce our today's speaker, Tomas Staškūnas, Chief Executive Officer of Civinity. Please, Tomai, the floor is yours.
Good morning, dear investors and all the financial community. I have connected to this webinar to present how we performed in 2025. But first, I would like to tell you that this time I'm connecting from quite an unusual place. I am making this webinar from Zagreb, Croatia, where we have just yesterday signed second acquisition deal of the year. So the year started quite strongly, and I will tell you more about our acquisition pipeline at the end. But now let's go and talk about how we have managed in the year 2025. So first of all, I would like to stress that we are operating mainly in facility management business, which is quite a huge market in Baltics. We are estimating that the total market of facility management and construction and engineering solutions is about 1.5 billion in size, and we are currently having quite a small market share in those markets. So we do see a lot of possibilities for further consolidation of the market. The business of Civinity is very stable. We have more than 80% of our revenue which are recurring. So we have quite a low fluctuation from year to year in our main business lines, and we have very good cash conversion ratio, which was more than 90% in 2025. We have slightly decreased our headcount in the last year, so improving our efficiency. And we are managing about 5 million square meters of residential buildings. We have a lot of commercial clients, and we have constantly finishing new projects in engineering business. And in the last 10 years, our revenue growth was about 7 times. So it was mainly driven by acquisitions, and we do foresee a lot of new acquisitions in the upcoming future also. And we are moving towards much more broader services to the city life. How we call it internally, Smart Green City is our strategic direction, and we want to improve our efficiencies and be a very convenient solution provider to each big city residents. As I mentioned before, we have split our business into 4 main segments. The biggest segment for us is residential building facility management. It makes up close to half of our total volume in revenue, and we are doing this facility management business in both Lithuania and Latvia. Same goes to commercial facility management. We also provide this type of services both in Lithuania and Latvia, and it makes about 18% of our total revenue. While engineering, we are providing in both Lithuania and Latvia, and also added UK as our market only for engineering services. It makes about 30% of our total revenue. And talking about more digital solutions, payment solution provided by investment in the company Mobile is already making close to 6% of the group's revenue. And we are going to pursue much more investments into the digital field in the future. Talking about the markets which we are operating in, of course, the biggest market revenue-wise is still Lithuania, making 77% from our total revenue. And we have grown quite significantly in the last year organically. No new acquisitions in 2025. So the growth was almost 20%. It was all three segments which we are operating in Lithuania were growing. Residential, commercial, facility management, also engineering. In Latvia, we had some different picture. We had growth in payment solution, but we had decline in residential and commercial business units, and also we had decline in the engineering business unit. And we have decided to significantly decrease our effort in engineering field in Latvia, because we have not been able to reach the scale of engineering, especially HVAC system implementations, to be profitable and efficient. In UK, we are still waiting for new big project to kick off. End of 2025, we have signed a new big implementation project in UK, but we will see the revenue from that project during the years 2026, 2027, and even part will be probably in 2028. So not big revenue in the last year. Talking about overall group performance, we have finally reached one of significant milestones of achieving more than 100 million euro in revenue. This was, as I said earlier, was achieved organically, more than 30% growth revenue-wise. And we have made this very efficiently. Our EBITDA also increased by similar amount. We have increased EBITDA to 8.3 million last year. And also we have improved our equity. We had some specific situation with one minority buyout, which had led to some decrease in equity. And our net debt is still net debt to pro forma EBITDA ratio is still very reasonable, and it gives us enough room to further acquisitions. In the last several years, this ratio has increased because of several big acquisitions which we have invested in 2024 in Mobile. We have finished the final payments for that investment in 2025, and also we have bought out minority shareholder from company Valandinis. Just to illustrate how fast we are growing, this is the journey in the last 10 years. As you can see, our revenue have increased about 7 times. and same could be said about equity and about EBITDA. And the growth is accelerating. As you can see, in the year from 2015 to 2020, growth was slower comparing to 2020 to 2025. So we are not going to stop. We want to accelerate it further. Currently, we have almost 40 companies in the group, and we are planning to add much more in the foreseeable future. Now, short overview about each our segment. So starting from residential business units, we have close to 90,000 clients in residential segment with 46 million revenue last year. So we are providing all types of services, both soft and hard, and we are cleaning, administrating, renovating, repairing, looking after heating, and providing all necessary services to for each residential building to function properly. This is our very biggest and the most stable business unit because it does not feel effects of business cycle in economy. So we had organic growth of more than 6% last year, both on revenue and on EBITDA. And we are maintaining a strong EBITDA margin of 17%. We are very happy with this business unit, and in 2026 we have already announced about addition to this business unit. We are planning to add a company in Vilnius at MEO. Now we are awaiting documentation, preparing documentation, and we'll be waiting for confirmation from Competition Council to make this acquisition. So in 2026, it will not be only organic growth, it will also be growth through acquisition. Commercial business unit. In commercial business unit, we are serving 1,600 clients. So it's very significant for us because we want to be to provide all types of services to our customers. And we understand that commercial business unit is more difficult and less profitable comparing to residential business unit, but we want to be one-stop shop to all types of building management. So close to 18 million of services provided to the customers. And we had quite healthy organic growth, more than 8% growth in revenue. Just we had been not as successful in our EBITDA, and we had quite a different first and second half of 2025. We have already felt quite significant squeeze from on the margin side in the first half of 2025 because of some long-term contracts had been at fixed prices, and our cost base in the meantime has significantly increased. So we had started a lot of negotiations during 2025 to improve our selling price, and we managed to make about 5% improvement. Just the effect started to materialize in the second half of 2025. Also, we have improved our efficiencies. We have decreased headcount in this business segment because we were not happy how we were operating. And this also had some lag, and full effect only materialized in the second half of 2025. So overall, we were not very satisfied with the result of 2025, especially on the EBITDA margin. But second half was much better comparing to the first half, and we do expect that this tendency will be in full effect already in 2026. Talking about our most cyclical business unit, engineering, we had more than 30 million euros in revenue, and we are mainly focusing on two engineering parts, two different types of engineering services, so HVAC services and BMS. Much bigger part is HVAC related, so this is why cooling, ventilation, and heating makes the biggest share of our total revenue. We had quite good growth revenue-wise in engineering last year. We had more projects, bigger projects, but we have not been able to improve margins. We are still feeling the effect of slowdown in construction business, which was especially strong in 2024 and also in 2025. And as most of our contracts are quite long term, we are usually not less than half year long, but more often than not more than 1 year long. We are still feeling the slowdown of this area, and currently we are ongoing some internal efficiency improvements just to be more lean and able to adapt to decreasing selling prices. Now talking about payment solution, our investment into Mobily was really timely, and we can share with you that Mobily is very dominant player in Latvia. Has a very strong following and very strong usage base, and with about half or more than 70% of all payments for parking and public transportation made through Mobily app creates a lot of opportunities. And Mobily team is actively working to expand offering to the clients, to include new products, new services, just to make the app even more attractive. And in the same time, starting expansion geographically. So last year, Mobily added Estonian market services into the app, like municipal parking, EV charging, and this April also added some places in Vilnius. So Mobily started offering their services both to Estonian and Lithuanian clients. The team of Mobily understands that it will be not as easy as in Latvia, but we have very good track record of providing the best services to the customers. And it can be clearly visible looking at increase in the number of clients. In the last 2 years, more than 80,000 new unique clients were added each year. And it is very strong growth. Last year, more than 617,000 clients have used Mobily app. And just showing revenue and EBITDA, the comparison is not full year to full year because we have invested into Mobily just in the August of 2024. So this revenue is comparing period starting from August 2024 to the full 2025. But even looking at the full year result, even comparing 2024 to 2025 full year, the growth in revenue is close to 20%, and the growth in EBITDA is almost double. Now, talking about financials. So as I mentioned before, we have reached quite a significant milestone, 100 million euros of revenue, and all four segments have significantly complemented to this goal. And the biggest increase was in engineering and payment segments, but also commercial and residential business units have added in the last year. And as I said earlier, it was achieved this time fully organic. Talking about gross profit margin, we have improved our gross profit margin quite significantly in the last several years. 21.6% gross profit margin last year. Of course, this payment segment helps a lot because it is a digital business with significantly higher gross profitability, but we have been able to add gross profit both in engineering and residential business units. The only laggard last year was commercial business unit, and as I said, it was mainly driven by the squeeze on the margins from long-term contracts with fixed prices and increasing cost base. Talking about pro forma EBITDA, so this year, 2025, our pro forma EBITDA is not different from regular EBITDA because we have not added any new acquisition during the year. And the main positive drivers were residential and payment business units. And we have kept our holding operations quite stable. We have not increased significantly our operating expenses. And again, just the commercial business unit had negative effect on our EBITDA. And talking about net profits, we had really good increase in gross profit. We have kept operating expenses reasonably efficient. But we have increased depreciation expenses mainly due to added investments into digital solutions, and also we had higher interest expenses relating to acquisitions and increase in net debt. Talking about the net profit in the last 2 years, about 60% of our net profit has been kept in the company. So we are actively reinvesting most of our net profit, which we are earning into further expansion of the group. We have significantly improved liquidity last year with refinancing short-term bonds, both public and private, and we had very strong liquidity ratio, about 1.3, and the equity ratio decrease was mainly driven as our asset base has increased about 15%. But as I said, acquisition of Valandinis minority part has had negative effect on our equity value. We had strong cash position, end of year close to 10 million euros of total cash. Part of that cash was restricted, but our net debt was about 21 million euros. Again, talking about debt duration, we have very significantly improved the duration profile. Now we have only 2.5 million euros of short-term debt in our balance sheet. Most of the debt is long-term debt. And this was achieved in 2025 by refinancing both public and private bonds. Debt to asset ratio has increased in the last several years, mainly driven by investment into Mobile and acquisition of minority shares of Valandinis. The total investment into both these items exceeded 8 million euros in the period of 2024 and 2025. So we have a very healthy net debt to pro forma EBITDA ratio, and we do expect it to improve in the future. Of course, it could also lead to some increase in this ratio with new acquisitions. But we are only acquiring successful, profitable businesses. So this effect of deteriorating ratio is very temporary. Talking about cash flow, we have strong cash flow conversion. Our operating cash flow to EBITDA level is more than 90% last year. So we had improved our cash position at the end of 2025. And now I would like to shed some light on our acquisition pipeline. We have already announced 2 acquisitions, 2 signings in 2026. We have announced signing of Agneo, residential building facility management in Vilnius. We have announced it end of March. And just yesterday, we have announced about investment, about acquisition of elevator maintenance, production, and implementation company in Croatia, which has also operations in Slovenia, has some footprint in Bosnia, and also providing elevation installation services in Western Europe, mainly Germany, but also other markets nearby. So these 2 acquisitions has been already announced, and we have at the moment 5 more acquisitions which are in quite progressed stages. So we have 7 acquisition targets in total for this year alone, and this plus behind 7 means that we do expect that this number could increase during the year. Just we are not sure we will be able to close all other deals already this year. So we are not limiting ourselves to the Baltics, but also with this Metus acquisition, we have entered Croatia and Slovenia markets, and we are looking at potential targets in Czech, Slovakia, Also, some initial talks have been started in Poland, Hungary, Finland. And those 7 targets which we are already have progressed talks with have a total revenue of more than 90 million. So by closing all those acquisitions, we would increase the size of the group twice, just 1 year. And also the pro forma EBITDA would also increase almost more than 2 times. 8.6 million euro is last year's EBITDA of companies which we are now actively working on acquiring. And total planned investment into those acquisition targets at the moment is about 44 million euros. So we do believe that we would be buying quite reasonable at a quite reasonable multiple. And those acquisitions are in several key areas of activity which are interesting to us. So of course it's facility management, both residential and commercial. It's digital solutions for similar type companies that we are, so facility management companies. And also we are looking at parking operations. All those business sectors which we are looking into would very nicely complement our current operations in 4 business segments we are now active on. So regarding the already announced acquisitions, as I mentioned, Admeo, we are awaiting for Competition Council approval, and we are thinking that we will be able to close the deal by end of summer or beginning of autumn. While Metus, we have already signed the deal and took over the company, and the final closing will be done in a couple of months according to our agreement with the sellers. So we have a very active acquisition pipeline. Besides these 7 targets, which we are already progressed with quite significantly, we are initiating new negotiations with additional companies. Because we do understand that acquisition process is usually quite lengthy and quite difficult to predict how long it will take. I can just tell you that Metus was done very fast, but all other acquisitions usually drag for quite some time. And this year pipeline is mainly created through strong effort of our team last year. So now we are already putting foundations for future growth in the upcoming years. So thanks for your attention. I have shared the main achievements of 2025, and now I would be gladly answering your questions.
Thank you, Tomas, for the presentation. And indeed, we are now moving to the questions. So please submit them in writing through the Q&A window or raise your hand to be unmuted. So we haven't received any questions in advance of the call. So maybe let's wait for a minute to give some time to those who might wish to submit questions now. Yeah. All right. It looks like everything was covered in the presentation indeed, and we do not have any further questions. So on behalf of Civinity and Nasdaq Vilnius, I would like to thank all the participants for your time and interest, and we will be looking forward to seeing you in our future events. Thank you.
Thank you.